Hey everyone, and welcome to the PivotBoss Closing Report for February 10th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the upcoming session here. Where we last left off, the pre-market report this morning, we were talking about 1865 to 1875 and how that zone was going to be an area where bears were going to look to defend for a shot at seeing a continuation downward into 1811 to 1804. And what we saw today was a push into that zone. And then we saw price hold just above the previous week's close for just a few minutes, and then that rejected. Once price is above the previous week's close rejected, the momentum was gone, and we saw a push right back into 1846 where we currently sit. So right now, with the initial failure to see acceptance above 1821 in the sell-off, then the retest of value for a defense and then a new low. Now we're seeing a pullback and a defense at the previous week's close, and that should open up another round of weakness ahead. Now, of course, if price pushes back above 1875s here, there's clear error back into 1921, so we're going to watch this closely. But as of right now, bears continue to have the upper hand. If we take a look at the intraday time frame, one thing that's become apparent is obviously we had a pattern here that looked like it was attempting to squeeze significantly back toward 1900 and beyond. However, again, price attempted to hold here above the previous week's high, and that's when the failure occurred back to value at 1848. So right now, this rejection here between the previous week's low and the previous week's close is concerning. I would say that any push into 1865 continues to be an area where bears will want to defend for a shot lower. Right now, if you're a bull's currently defending 1830 and perhaps anything below 5-day value here, but it's you're in a downtrending market right now, and it doesn't seem like a clearly defined area. So I would hold off right now until we have better levels to trade from. Now, if we take a look at crude oil here, something that was significant here. Obviously, we watched this one battle all day long in the trading room. It was fascinating. Got a nice squeeze off of this one from the previous month's low. We saw a big time rally, and then that rally was clearly rejected on those highs, and that sparked a push to new lows. So that was another session here where we've seen lower highs day over day, lower lows day over day, and now we actually have our first close below that January key range low, 27.56. Now, this is what I mentioned before. If prices are going to see expansion below 27.56, we're going to target a couple of key levels ahead. Number one, primarily 24.63 and 21.69 are key levels that we can target. If this thing really gets steam, we know that the 100% expansion target puts us all the way down into 1582. If we take a look at the monthly expansion targets here, it's all based on the previous month's range on the PivotBoss pivots, and basically we're taking the highest high and the lowest low of that January range, and that's why you see these levels are lining up perfectly. So I really don't need to put on our PivotBoss expansion levels as the key range is doing the work for us, but this is going to be important to watch. Failure to get back above 27.56 will lead to a further slam, and any push back above the previous week low, 29.40, could open up a return back to 33.43. So we got to continue to watch this 29.40 level as the major pivot moving forward. Right now, prices were defended there, and that leads to further weakness ahead in all likelihood. Now, if we drop down into the lower time frame here, we were able to follow a fantastic squeeze here off of these lows during our trading room session, and that got us a squeeze right back to value. From there, the 9:30 crude oil report came out, and we saw a big time move, and then that failed right here off that 29.25. If you recall, 29.25 was the key zone where I had been saying for several weeks here that bulls were defending. Bulls were defending 29.25 to 29.40 for quite some time, which is that zone right there. And when it went offered, the first chance it had to retest that zone was defended, and then we saw a push to new lows. So right now it's clear bears are still in control right now, and again, any failure to hold or regain acceptance back above 28 opens up a continuation into those downside targets we specified. Looking at gold now. Gold has spent another day on highs here, forming a very clear range on highs. This is either a distribution range or it's refuel time, reaccumulation for another round of strength. It's apparent right now that after this sudden rally here, this big time continuation move to the upside, we have now hit a point where we're seeing a little bit of a slowdown, a little bit of digestion happening on these highs. And I mentioned before, typically speaking, when you have a pattern like this that you're playing off of, this recent high that leads to the move downward is usually where you go back to. And right now that's 1192, and that's where we're having trouble attempting to establish acceptance above that zone. Acceptance above that area would lead to a continuation into 1206 and 1225, but failure to hold above 1180. 1180 is going to be that LVN that we're watching. You can actually see it here on the profile. If I take away the 75% flag here, look at that profile and that LVN right here that's forming at 1180. That's the one that bulls are defending for a shot higher into 1224.90. Bears want to run the stops below that level to see a push back toward 1130, or perhaps at least back to the previous week's close of 1157.70. So that's what we're watching right now. And dropping into the intraday time frame, you can see that range continue to build out. This is the range we've continued to talk about for some time. I keep talking about 1180, and you can see the defenses off that zone and the rotations higher. So 1180 is clearly the zone right here, up to about 82. Bulls defending this zone for rotations higher. Bears defending 1200 for rotations lower. Eventually, expansion outside of this range sparks the next major move. I believe that failure to hold 1180 opens up a return to 5-day VPOC at 1155. Now, taking a look at the NQ. The NQ here also showing very similar to crude oil, some rejections here. And this rejection on the wave higher. So right here we saw a little bit of a push into 38.93.5. That led to a bounce into 40.36 from below and 40.25, that HVN there. And this is the area where bears defended. I think we talked about it before. If price comes into this zone, you got to watch out, because if there's rejection here, that leads to a move downward, right? And you can see here, I talked about this before, if price is going to go up after this digestion day, you need to push well beyond this previous high and close above it, and the next session come back to it and test it for a confirmation move higher. Instead, what we saw was price get above that high and reject and close back down below that 4,000 zone. So right now, again, this is pointing to another leg of weakness ahead, and if we're going to see weakness to the downside, then I would be targeting these next downside targets ahead in heading into Friday's close. So right now, bears still defending this 40.25 to 40.36 for a shot at downside expansion into 37.27 with these scaling targets ahead. That's the most likely course of action short term, unless bulls can reestablish acceptance back above 40.36. Looking at the intraday time frame, and we'll close this thing up, we have a very clear range that had built out here. I was talking about before with Janet Yellen coming up. We could see expansion from this range. We haven't seen that quite yet. As a matter of fact, we saw failed expansion when price was not able to keep its head above the previous week's close. So if this is failed range expansion to the upside from this tightly coiled range, we could dump way, way lower right now. And because this has a lot of energy to release. And we didn't release it to the upside. And as a matter of fact, it was rejected. That could point things much, much lower. So that's just a word of caution right now. We could see further development within this range until true expansion occurs. So watch the boundaries. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.